are diving into a story that's shaking up the tech world, disrupting global trade and reshaping the future of digital infrastructure. From a high-stakes TikTok deal that could redefine the social media landscape, to sweeping new tariffs aimed at boosting American manufacturing and a multi-billion-dollar bet on the future of data. There's a lot to unpack. Welcome to Finance Pulse, and here are the top headlines of the day. A major breakthrough in the months-long standoff over TikTok's future in the United States. President Donald Trump has signed an executive order approving a deal that will allow TikTok to keep operating in America, but under strict new terms. The agreement satisfies a US national security requirement that China-based ByteDance sell its US operations or face an outright ban. Under the deal, a new joint venture company will take control of TikTok's US business, with ByteDance's ownership cut to below 20%. Vice President J.D. Vance says the arrangement values TikTok's US arm at roughly $14 billion. The Chinese government still needs to sign off on the deal before it's finalized. A dramatic new front is opening in Washington's trade war. Trump announced that starting October 1st, the US will impose a 25% tariff on all imported heavy trucks. It's part of a broader strategy to boost domestic production and reduce reliance on foreign manufacturing. The move comes alongside a wave of new trade measures: 100% tariff on branded pharmaceuticals, 50% duties on kitchen cabinets, and 30% tariffs on upholstered furniture. All of these are scheduled to take effect at the start of next month, a sign that Washington's aggressive trade posture is not slowing down anytime soon. And finally, in the global investment space, Qatar's sovereign wealth fund is teaming up with one of Wall Street's fastest growing asset managers for a massive push into digital infrastructure. The Qatar Investment Authority and Blue Owl Capital have announced a $3 billion partnership to build a new global platform focused on data centers, the backbone of cloud computing and artificial intelligence. The two firms say the project aims to accelerate computing capacity for major tech clients worldwide, underscoring how the AI boom is driving billions of dollars into the infrastructure behind the next digital revolution. Now, let's turn to our deep dive and one of the most closely watched stories in tech and geopolitics. TikTok's future in the US has been hanging in the balance for months, and now a deal valued at $14 billion promises to reshape not just the app's business model, but the entire social media landscape. TikTok is more than just a viral video platform. With 170 million active users in the United States alone, it's one of the most widely used apps in the country, rivaling giants like Instagram and YouTube in terms of daily engagement. Its powerful recommendation algorithm, widely seen as the secret to its success, has sparked an entire wave of copycat products across the industry, from Instagram Reels to YouTube Shorts. But putting a price tag on TikTok's US business has always been tricky. The platform is enormously influential and lucrative, generating over $10 billion a year in revenue. Yet the proposed $14 billion valuation implies a price-to-sales ratio of about 1.4 times. That's more in line with established industrial giants like ExxonMobil or General Mills than with fast-growing tech companies. By contrast, Meta, the parent company of Instagram, trades at around 10 times sales, while Google's YouTube business commands a multiple of about 8. So, why this steep discount? Analysts say national security concerns and political risk are a big part of the answer. The deal is being driven by a US law requiring ByteDance to divest control of TikTok's American operations. The new joint venture must be created within 120 days, and ByteDance's stake will be capped below 20% to address concerns about Chinese government influence. President Trump says China's President Xi Jinping has privately given his blessing to the sale, but so far, Beijing has not confirmed that publicly. And there's still plenty of uncertainty about what comes next. As venture investor Alvin Fu put it, it's like you're putting a gun to ByteDance and saying, sell or you stop. Key questions remain over who will operate TikTok US once the sale is complete, especially since none of the proposed buyers are major consumer technology players. And there's no guarantee Beijing will sign off on losing control of one of China's most successful tech exports. What is clear is that this is about much more than just an app. TikTok has become a flashpoint in the broader US-China rivalry, a battle over data, influence, and technological dominance in the 21st century. The outcome of this deal will set a precedent for how foreign-owned digital platforms are treated in America and could shape how other countries approach their own national security concerns in the digital economy. That's all in Finance Pulse for today. Follow the Finance 360 for more updates.